The stock market has taken a nosedive. In fact, it hasn't been able to hit its previous highs. 2018 has been a volatile year. Ever since the Fed hiked interest rates the last time, the market has been dropping lower. Perhaps the market doesn't want the Fed to increase interest rates. After all, you came here for the truth. So let me unveil that for you. Today we're going to look at what has happened in the stock market. I want to show you various economic indicators. Let's begin. Terrible day. S&P 500 posts the worst start to the second quarter since 1929. This is very significant because there was this euphoria that was present all throughout 2017 and into January of 2018. And we saw month after month after month after month of increases. And then the market started to drop. And then it became very volatile. And since, it has been going up and down in big swings. And that volatility was simply not present all throughout 2017. Today, we finally see some of that euphoria that is in the stock market to be, let's say, less present. All right. And that's the way it should be, of course. If you feel like the second quarter began badly, you'd be right. US stocks had their worst April start since 1929. The S&P dropped 2.2%. A rout exceeded only by its 2.5% decline 89 years ago. And what they say here is that this was a prelude to the devastating crash later that year. And of course, we all know what time frame that was. So looking at this, almost 100 years ago, what had happened? The market was becoming volatile. It dropped down significantly, and the market started to have this fear, and then we really got the show on the road. It doesn't happen overnight. There might be a trigger event, which we then look back into the pages of history and say, that was the moment when people started to lose faith. But it might take 3 months, 5 months, 6, 12 months in certain cases. I've shown you this before. So let's just keep our eyes on it, of course. You're taking a look at this here. The Dow Jones actually dropped down below its 200-day moving average, a very significant number for traders that are out there, human traders, if they still exist. You can see that obviously the computer algorithms trade based on these numbers. They push them up higher, bring them down lower, whatever the case may be. So that's important to note. And then we had several dead cat bounce that occurred. Ever since the Fed hiked rates the last time around, the market came down, came up, came down, came up, and so on and so forth, okay? So we can see here what has happened. This hiking rates is not good, despite the fact that, oddly, it's seen as being a good thing, or at least the market was saying, yes, increase interest rates, that's what we want. But of course, that's not what they want. They want the talk to be there, but they don't want the action. And it's starting to look like when they increase it by 0.25%, that's too much. So it wouldn't even surprise me to see, if they want to keep the market alive for a little while longer, to see just even a fraction of that, maybe 0.1. Who knows, 0.15. I'm not really sure what their actions will be, but all I know is that the market doesn't like interest rate hikes. And if that's the case this time around, it would be totally normal compared to all other previous times the Federal Reserve has increased interest rates. Looking at the FANG Plus index, this has come down significantly from its peak that was experienced here, going back to levels that were in January. Okay, that's not really a good sign for the future of these particular stocks, in the near future, I should say, because there's that volatility there and people are worried. Now, you'll tend to find that it's the retail investors that are always last to the party, right? They always show up last. And that's sometimes a good thing because they don't have a chance to keep piling and piling in more money. But generally, it's the retail investors that get out last, or don't get out at all. In fact, I had a conversation today about this very thing. Individuals, I was listening to a conversation and hearing the investments that these people who don't know anything about the financial industry, they were discussing what exactly they will invest in. And simply riding the trends. Whatever it is that they heard would be a good investment, that's what they want to put their money into. And that, of course, is the complete opposite thing that you need to do. You'd be better off investing in a business than into stocks right now at this time. But of course, that's nothing but my opinion. Please, by all means, do what you need to. These here are the FANG stocks and others in the tech sector getting pummeled. Absolutely pummeled. Whether it's Facebook or Amazon or Netflix or any of the other ones, it's just interesting to see how they can really pull back. Because of course they've come up quite a bit. So a pullback here of 3 to 5%, when you look at it, zoom out and look at it, it's not that big of a deal. But all we need to look at is the fact that one individual day, one move, could begin a second and a third and a fourth, right? All right. This here basically just showing you that we're going back in time to the levels we haven't seen for quite a while here. The font is too small for me to read. I think that would be January. It makes sense. Maybe December. And we are looking at all of the different stock markets, and they all got a beating. They have all taken a beating, all of them. Even though the talk of the news today was about Amazon. All right, Amazon is the issue. But yet all markets come down. Why? Why isn't it just one stock? Even if that one stock was sort of the worst performer that day, it seems like it just drags everything down with it. That doesn't show any strength in the economy at all. Then I want to touch on just two quick points here. The fruit of financialization, soaring income inequality. So you have people who are buying up businesses. They are investing like a guy like Warren Buffett, who gets sweetheart deals in the market. He knows when these crashes are coming in advance. They prepare in advance. They've got it all set up. They're buying farmland everywhere. They are able to capitalize on different countries around the world that are going bankrupt. So they come in, buy up the assets under shell companies, under their own personal companies. They have holding companies that they can do business with. And unfortunately, the average individual always ends up losing every single time there's another crash. Well, you can see here, in 1980, lower income households had the highest growth in 1980. The higher the income, the lower the growth rate. Now, 2014, but of course it's actually even more present today. The super wealthy garner virtually all of the income growth. Now it's reversed. The higher the income, the higher the growth rate. Very clear on this chart. Shows it for yourself. All right. Now to turn quickly to China here. You saw what had happened, okay? I showed you the 2 steps that they've already completed. And now they are actually using their propaganda arm here. And you'll see what they said very quickly. The Shanghai debut of China's first yuan-denominated crude futures trading market proved to be a great success. Major domestic and foreign traders displaying active interest. Turnover was about 2.9 billion on the first trading day. Now think about that. A brand new market opens up and $3 billion gets moved into it. That's pretty significant. The market's better than expected performance is believed to have significantly contributed to the recent strength of the yuan on global currency markets. All right? And it basically goes on in this article. I won't read the whole thing for you, but to talk about the fact that this is done specifically to challenge the petrodollar. That's literally what it says in this article. You could see it for yourself on Global Times. I'll put the link in the sources. But they actually say, look, we want to be challenging what those out there are doing. We want to make sure that we are getting some of that pie. All right. Now that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. At the time you're seeing this, we might already be over 99,000 subscribers, so hit the subscribe button so that you can get on this as we cross through 100,000 subscribers. Thank you all to those who have joined recently. I want to say hello to you. And last but not least, if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you need to do is go to Amazon. There are links in the description of this video. They'll take you over there. You can actually flip through the pages of the books to see if you like them. Take care.